Hello everyone. So welcome to an important part of the third module, that is secondary market. In today's session, we are going to look into what is the secondary market all about, how is it different from primary market, what are the similarities in the primary market and secondary market, the important features, functions of the secondary market, including its structure. So I hope you are ready. Come, let's move. So getting into the meaning of secondary market. So what is secondary market? It's a marketplace where already listed shares or where all the issued shares, be it shares or debts, it can be bought and sold by the investors. So when a company issues its shares for the first time, it does it in the primary market. After the IPO, initial public offering, those securities, they get available for trading in the secondary market. Let us go to the features. So looking into the features, first of all, it gives liquidity to all the investors. Any seller in need of cash can easily sell the security due to its presence for a large number of buyers at large. Very little time lag is there between any new news or the information on the company and the stock price reflecting that news. The secondary market, or called the stock market, it can easily adjust to the price at any sorts of developments happening in the securities market. It's also an alternative to the savings method. Lower transaction costs are involved here. Demand and supply economics is also easily assisting towards price discovery. Secondary markets face heavy regulations. Also, such heavy regulations can ensure the safety for the investors' money too. Now, some importance or the functions, or we can say, of the secondary market. It's a good indicator of a country's economic condition. Then we can say it helps in valuing a company based on the economic forces, be the demand and the supply conditions. It ensures liquidity of the investors, as and why there is a buying and selling of the securities in the securities market. Also, it gives the investors wider chance to use their idle money to earn more and more returns. It helps all the company to monitor and control their public perceptions. Let us see some important relationship between the primary and the secondary market. Now here, relationship between primary and secondary can be bifurcated into two types. One is called the similarity and the other one is called the dissimilarity or differences. So let us first see the similarities. Based on listing, if you find, the securities issued in the primary market are invariably listed on a recognized stock exchanges for various dealings in them. Further, the trading in the secondary market can also be carried out only through recognized stock exchanges. The listing on the stock exchanges provide liquidity and marketability for the securities and helps in facilitating the discovery of the prices for themselves. The quantum of trading and the participation of the investors on stock exchange will have a significant bearing on various activities in the primary market. Hence, it creates more responsive to the capital market too. As more and more companies issue their securities in the market, investment options for the investors increasing their wider participation in the secondary market. Let us see some important differences. So differences between primary and secondary market. Based on the meaning, we have primary market. It's a market where the new issue of shares are happening. Secondary market, where formerly issued shares are traded. Primary market, other name is new issue market, and secondary market, other name is stock market or called aftermarket. Primary market, if you see the type of purchasing is direct. The type of purchasing in secondary market is indirect. The primary market financing would be, it supplies funds to the budding enterprises, the new enterprises, and also to the existing companies for expanding and diversifying their business opportunities. Secondary market, it does not provide funding to any companies. How many times the securities can be sold? Only once in case of primary, but many times in case of the secondary market. Buying and selling happens between the company and the investors in primary, but it happens only between the investors in case of secondary. Who gains the amount on the sale of shares? The company gains in the primary. The investors gain themselves in the secondary market. Intermediary is underwriters in primary market. Intermediaries would be the brokers and sub-brokers in case of the secondary market. In case of the price, the primary market, it's fixed price. But in case of secondary market, the price fluctuates. That's why we can find there are more speculative gains happening here, depending on the market conditions, that is, be it the demand or the supply forces. And finally, the organization differences. In case of primary, it cannot be rooted to any specific spot or geographical location. But in case of secondary, we can find it has physical existence too. Let us see some important functions of secondary market. So what are the important functions? The first function we can say is regarding it provides a better trading practices, encouraging investment in various financial securities. It keeps up a check on the pulse of the economy. It ensures and creates liquidity to the investors too. It gives ready market for purpose of buying and selling or trading of the financial securities in the market, allocating the capital of the investors to profitable channels. It inculcates the habit of savings and investment, creating various attractive options to the investors to invest their securities in a wide perspective by utilizing their idle money. Provide safety to transactions what is being undertaken based on the rules and regulations of SEBI. It contributes for the growth of economy because there are securities of financial instruments which are traded in the stock exchanges, and this whole process of investing, reinvesting, and disinvesting or privatizing, we say, it helps to invest in most productive investments, and which are unproductive, they don't try to go for it. So obviously there is a choice which will be leading them to better decision making in the promoting for the economic development in the country. And finally, this valuation can be done based on various factors like demand and supply. Hence, the stock market becomes an economic mirror which helps in finding the value for the financial instruments in the economy. Last but not the least, let us see the structure of secondary market. If you see in case of secondary market, there are mainly three types of securities being traded. One is equities, the second is bonds, and the third is put and calls, which is called the derivatives market. Under equities, if you see, we have organized stock exchanges, OTC, over-the-counter market, third market, and the fourth market appearing. In case of bonds, we have organized exchanges, which is relatively small amount considered. Over the counter, that is OTC market for the bonds. And finally, in case of derivatives, that is put and calls, we have organized stock exchanges. So in today's session, we had been discussing about the meaning, features, importance, and functions of secondary market. Also the structure and the relation between primary and secondary, including its similarities and the dissimilarity or the differences. In coming sessions, we'll be dealing in depth about the secondary market. Hold on for the coming days. Thank you. Have a nice day. Bye.